Artificial intelligence is moving faster than almost any technology wave we've seen in decades. Right now, companies across the world are pouring billions of dollars into AI infrastructure, automated systems, and high-performance computing platforms. Entire industries, from healthcare to defense to logistics, are being reshaped by intelligent software and machine learning. But here's the catch. Most investors are focusing on the same handful of massive AI companies already dominating headlines. Meanwhile, a completely different layer of smaller companies is quietly building pieces of the technology stack underneath this entire ecosystem. And this is the part most people miss. Some of those companies are still trading for just a few dollars per share. Today, we're looking at two of them. One is trading around 407. The other sits near 358 won. So the real question becomes, are these simply small companies trying to ride the AI trend, or are they operating in areas of the AI ecosystem that the broader market hasn't fully priced in yet? Now this is where things get interesting. When major technological shifts occur, investor attention usually follows a predictable pattern. First, capital floods into the obvious leaders, the largest companies building AI platforms and software models. But beneath those giants exists an entire infrastructure layer supporting the technology. That includes semiconductor innovation, advanced computing architecture, and specialized AI analytics systems. And this is where pricing inefficiencies often appear, because institutions and professional investors frequently analyze the smaller technologies enabling these ecosystems. This is the type of layer institutions quietly watch long before the broader market notices. Now that doesn't guarantee anything. Small-cap companies carry real risks, but it explains why certain technologies begin attracting attention before their stock prices reflect the potential. And this is exactly where smaller cap opportunities tend to form. The first company operates in a very technical part of the AI ecosystem, one most investors rarely think about. Instead of building AI models or software platforms, this company focuses on something even more fundamental: improving how semiconductor chips perform at the microscopic level. And that matters far more than it might initially sound. Modern AI systems require massive computing power, and every improvement in semiconductor efficiency can significantly impact how fast and efficiently those systems operate. But here's the catch. Developing semiconductor innovation is incredibly complex, expensive, and time-consuming, which means smaller companies working on breakthrough materials or technologies often remain under the radar for long periods of time. And later in this video, the second company we'll discuss approaches the AI ecosystem from a completely different angle, one focused more on software intelligence and decision-making systems. The semiconductor industry sits at the heart of artificial intelligence. Every machine learning model, data center workload, and AI system ultimately runs on specialized chips. As demand for AI computing continues rising, manufacturers are constantly searching for ways to improve chip performance, reduce power consumption, and increase processing efficiency. If semiconductor innovation continues accelerating, then companies developing new materials or technologies that enhance chip performance could become increasingly important within the AI supply chain. But again, that's a conditional scenario, and technology development cycles can take years before reaching widespread commercial adoption. Looking at the stock itself, the price history shows significant movement over time. At earlier points, the shares traded at much higher levels before experiencing volatility and pulling back. Eventually, the stock stabilized at much lower prices. Today, it sits around 4.07 per share. So the question investors sometimes ask in these situations is simple. Is the current valuation reflecting uncertainty or potential future relevance if its technology gains broader adoption? The company primarily works with semiconductor manufacturers and industry partners to integrate its materials technology into chip production processes. If successful, these improvements could enhance performance without requiring entirely new chip architectures. But this is where things shift. Because when you actually look at the company behind this semiconductor technology, you'll find it's Atomera Inc., trading under the ticker ATOM, currently priced around $4.07 per share. Semiconductor innovation can take years before translating into large-scale commercial success, and many promising technologies never reach widespread adoption. So this doesn't mean the stock moves tomorrow. There are real risks here, and timing is often the biggest factor when evaluating early-stage semiconductor technologies. Now, before we get into the second stock, here's something most people completely overlook. Even though AI demand is exploding globally, many of the companies building intelligent systems used by governments and large organizations remain relatively small, and that's where the second company becomes interesting. But unlike the first company, which focuses on semiconductor innovation, this second company operates on the software intelligence side of artificial intelligence. Instead of improving computing hardware, its technology focuses on analyzing large amounts of data to help organizations make faster, smarter decisions. And this type of technology is becoming increasingly important in areas like defense systems, logistics planning, and predictive analytics. Artificial intelligence systems are often used to analyze complex environments and identify patterns humans might miss. For example, predicting supply chain disruptions, analyzing military intelligence data, or helping organizations make real-time operational decisions. The company behind this technology builds platforms designed to process large datasets and generate actionable insights. If AI adoption continues expanding across defense, government, and enterprise systems, then companies specializing in AI-driven decision intelligence could become increasingly important, because advanced analytics platforms help organizations turn raw data into strategic decisions. Looking at the stock history, the shares have also experienced significant volatility. Like many smaller technology companies, the price has moved through multiple cycles of optimism and pullbacks. After trading higher in the past, the stock eventually declined before stabilizing around current levels. Today it's trading close to $3.58 per share, which raises the familiar question investors often ask. Is the market pricing in risk or overlooking potential future demand? And this is where it gets interesting, because the company behind this AI intelligence platform is Holdings Inc., trading under the ticker BBAI, currently priced around $3.58 per share. Companies operating in emerging technology fields often face unpredictable growth paths. Government contracts, enterprise adoption, and competitive pressures can all impact future performance. So again, this doesn't guarantee anything. There are real risks involved with smaller AI companies. So now the interesting comparison appears. The first company focuses on semiconductor materials, technology supporting AI hardware. The second focuses on AI-driven analytics and decision intelligence software. One sits around $4.07 per share, the other around $3.58. But the real tension investors think about is this: if AI adoption accelerates across industries, which type of company benefits first? A semiconductor innovation provider working inside the chip supply chain? Or a software intelligence company analyzing massive data sets for real-world decision-making? Both operate in completely different parts of the AI ecosystem, and both come with very different timelines and risk profiles. When looking at smaller companies connected to emerging technologies, the key insight isn't predicting short-term stock movements. It's understanding how technological revolutions often unfold in layers. Artificial intelligence isn't just about software models. It also involves semiconductor innovation, computing infrastructure, and advanced data analysis platforms. And this is the layer that tends to move later, but sometimes more aggressively if adoption accelerates. If you enjoy exploring smaller companies connected to emerging technology trends, consider subscribing for more research-driven breakdowns like this. And as always, this discussion is for educational purposes only, not financial advice.